Assalamu alaikum, everyone. So,
Salam.
let's see. Like Safir and I are here to talk about a few different things. But before we get started, why are Safir and I here? Safir, like, how many investments do you think we've done together over the years?
I don't know. Maybe I think 9 or 10 probably over the course of I don't know 7 or 8 years.
Yeah, alhamdulillah. Yeah, you're right. It's about 8 years. I was looking up in my Gmail. I looked up your names. Like, when did we first connect? It was exactly like almost 8 years ago. And feels longer because I think we've invested in like real estate, startups, so many different things together. But why are we here today? Like before we talk about the agenda, can you maybe just introduce yourself and why people should care about listening to you? Yeah.
Assalamu alaikum. My name is Safir. I'm one of the co-founders of Nia, which we'll talk a little bit about the end that provides debt-free home ownership for folks. But I've also am a co-founder of Cordoba Funds, which have been operating debt-free real estate funds for almost 10 years now. And we've done everything from single-family homes to strip malls to land development, and we've probably done 12 to 15 different projects over the lifetime, and about 20 have probably raised about $25 million that we've done. Um, Sheikh Omar, maybe you can tell the audience a little bit about you as well.
Yeah, so I'm an Islamic scholar specializing in Islamic finance and part of the Fiqh Council of North America. Teach at different seminaries, and I am a Sharia advisor to various different finance companies and other types of companies. Safir, that we obviously we work together at a few of the companies, and so yeah, that's me. So this is the first in a series, JazakAllah Khayr, to Nia, which provides halal home financing to people. This is the first in a series of podcasts to come. Today, we're here to talk about really building a high performance investment portfolio. So, Safir and I both, we go around the country, teach people how to invest and how to do it in a halal fashion. We're passionate about getting people to invest. And so, we'll spend a little bit of time today, inshallah, just talking about why invest and how you start off investing. But then we're going to get into the meat of the topic. And the meat of the topic is when you become an advanced investor or a sophisticated investor, even if you're not, what are some of the things to think about before you make a particular investment? And then how do Safir and I think about building a portfolio for ourselves or building a portfolio for others? Because that's one of the things we do is we help people build portfolios. It's a passion that we have. So we don't have like a structured, a bunch of slides to go through today. We have a couple of slides we put together to address some points. It's a fireside chat. So it'll be a casual conversation, not unlike many of the casual conversations that Safir and I have on a regular basis. This is kind of how we talk to each other. We have finance nerd speak going back and forth. So as we get into that, Safir, like, can you maybe talk about, let's start with like, why should someone start investing, right? So why did you start investing or why should others start investing?
Yeah, for me, I think when I was in high school, I had done a side project and made some money, and I was trying to figure out what to do with it. Um, And from there on, I started thinking about investing and started researching a couple of companies. And the two ones that I really liked at the time were Tesla and Amazon when they were not so popular. Um, and I got to start thinking about like studying their balance sheet, their revenue, how they were growing. And then I kind of just got really hooked on it and got more and more interested in investing. So since I was a kid, it's been something that I've kind of evolved in. And then I even started like a little site called Muslim.finance, which is like my personal finance guide. And Sheikh Umar, obviously you do webinars kind of all over the country for this type of stuff too. So it's been a personal passion of mine, definitely. Maybe you can talk to us a little bit about like why we should invest in the first place from an Islamic perspective and what does that look like?
Yeah, so I think everybody understands that Islamically speaking, wealth is something that comes from Allah. He's given us rizq. We know what rizq is written down, and He's entrusted us with this wealth. And what we're expected to do from an Islamic perspective is either use that wealth, do something with it, buy something, hopefully something that's useful and beneficial, or we give it in charity like zakah or sadaqah or something like that, or that we invest it. So those are kind of the three options. Either use it or give it to somebody else to use as a gift or charity or whatever, or invest it. Don't just sit on cash. So the Islamic principle is to keep the money circulating. Because when money circulates, as we know, we've studied in microeconomics, macroeconomics, as money circulates, it boosts the economy. It creates jobs, it provides products and services that are beneficial to people, and it results in just a better situation for all of society, not just someone personally. Of course, it benefits you personally, but also it benefits all of society. And also, there's this famous hadith that's mentioned in Sunan at-Tirmidhi, where some people say, and in fact, Imam Tirmidhi mentions that maybe the Prophet ﷺ made this statement, but maybe it wasn't him, maybe it was Umar radiallahu an, where there's a discussion about the wealth of an orphan. And Umar radiallahu an is reported to have said, what you should do with this is فَلْيَتَّجِرْ فِيهِ, that you should be trading with this money. You should be investing this money. And he goes on to say that if you don't invest it, what's going to happen is you're going to be paying zakat on it every year. And when you're paying zakat and you're not investing, all you're doing is losing the money, and you will, at some point have nothing left. And so he's encouraging this for orphans, but it's really a more general lesson that the scholars have expanded, that all of us need to be investing our money. Otherwise, it's going to go down because of zakat. And of course, now, 1400 years later, we also have this idea of inflation, right? People on Twitter are talking about egg prices. They measure egg prices specifically and how they're going up over time, but it applies to your Happy Meal at a fast food restaurant. It applies to gas prices, everything. If you're not investing, the value of your money is going down, and also the amount of money is going down due to zakah.
Yeah, so maybe let's talk about, we've talked about the benefits of investing, but let's talk about the consequences of not investing. And I'll bring up a slide to talk a little bit about that.
Yeah, so this one's maybe one of my favorite slides that I love to share at the beginning of my finance seminars, is I talk about the difference between savings and investment. People know you need to save money and they save money. And so here I use the example of a fictitious character named Ahmed. And Ahmed doesn't actually exist, but these numbers here are real. And so Ahmed is an average person with an average salary. When he started working at the age of 25, he made 26,000 a year. But I wanted to place real numbers on this. So this is 1981 through 2020. Okay, 40 years, about 40, 41 years, something like that. The average length of a career. And Ahmed, what he's doing is putting away $400 a month. And so if you look at the amount of money he saved over 40 years, approximately 40 years at $400 a month, he saved a little less than $200,000. Okay. And in that time, instead of just saving, if he instead, and this is why Ahmed was smart, he wasn't just saving, he was putting this money into his 401k. And so if you put this money away and invest it in just the stock market, these are real returns of the stock market that you see on the screen over here. You can see that instead of $200,000 at the end of 40 years, he would have had $3 million. And that's the fundamental difference between saving and investing. And of course, there's risk with investment. So you can see in the short term in the stock market, sometimes it goes up, sometimes it goes down. But in the long time horizon, it has always gone up. And in case someone's thinking, oh, Ahmed was one lucky guy, he just happened to invest at the right time during the right years. No, this research has been done again and again. You can download your own numbers. There's compounding calculators online. You could do your own test. Pick any 40-year period, and you will do really well by investing in the stock market as long as you're investing for the long time horizon. This wasn't just Ahmed being lucky.
That's great. Let's talk a little bit about what are the investment options that we have. So can you talk to us a little bit, Sheikh Umar, about like what we can invest in Islamically and what are the principles that we should consider as part of that?
Yeah, so I mean, the Islamic principles are not that complicated, really, right? And the way we need to think about is the default in Islam is permissibility. So there's a famous fiqh maxim, al-aslu fil ashya'i al-ibaha, that the default when it comes to doing anything, when it comes to worldly things, like you're drinking, I don't know, coffee or something, how do we know that's permissible? Because by default, it's permissible. We're using Zoom over here to conduct this webinar. How do we know it's permissible? Because that is the default. You have to prove that it's haram. And so generally speaking, putting money into businesses, investing and so on, this type of stuff would be permissible unless the business itself is haram. So if it's dealing with alcohol, it's dealing with pornography, something like that, then that would be a problem. But otherwise, it's permissible. And the other thing we need to think about, and this isn't unique to Islam, also true of Christianity, was also true of Judaism, and this is why Allah talks about the Jews in the Quran, وَأَكْلِهِمُ الرِّبَا, that they used to take riba even though they were not allowed to take riba, is this idea of taking interest or riba. So it's prohibited in Christianity, prohibited in Judaism, prohibited in Islam, prohibited by the Greeks and the Romans, and it's been something that's kind of been there from the beginning of time, is the idea of not giving out a loan based on interest.
Let's maybe talk about so that was really good principles at a very high level. So let's talk a little bit about specifics of what type of investments are allowed and not. So can you walk us through this slide maybe a little bit?
Sure. Okay. So the first category here is real estate, right? And so everyone knows what real estate is. It's ownership of some sort of physical space. It could be a house, it could be a condo, it could be a mall, whatever it is. It could be residential property, it could be commercial property, it could be something that you've bought yourself, or you've pooled money together as a fund, and so you're buying it through a fund. And then it could be rental, where you're renting it out, or it could be a flip of some sort, where you're building something and then flipping it over. You're constructing it, improving it, you're flipping it over. Or it could be a combination. And combinations are interesting because you can build something and then rent it out and then flip it. And then you actually get good zakat treatment and good tax treatment as well. But the big gotcha in real estate, by default, it's permissible. The big gotcha is non-Muslims generally, when they engage in real estate, and sometimes even Muslims because they don't know, they get involved in what's known as leverage, where they're taking a loan from the bank and using that to multiply their returns. So oftentimes you're going to find there's loans involved, there's leverage involved, and that makes it impermissible. So as long as we're doing it in a way that we're cash only, then the leverage isn't there, and that makes the real estate very doable. The next four categories, it looks like, are all called, they're all subset of something called equity. Equity means you own a portion of a business. So whether it's public stocks in the stock market, it's a small business, private equity or venture capital, you're somehow owning a business. So stocks are like, you go to the stock market, buy some individual stocks. For example, you can use an app like Zoya to make sure that it's halal because sometimes, stocks, even though you think a company is halal, when you go look it up, you find they're getting too much of their revenue from haram sources. And so the scholars have said that, a small amount of haram that comes into your stock could be acceptable based on need, like up to 5%, but anything greater than that becomes a problem. And even that 5% needs to go through some purification. But anyway, you can buy individual stocks. You can buy funds like mutual funds, exchange traded funds. There's halal versions of those. What's not allowed here, according to the vast, vast, vast majority of scholars, is you can't do stock options and you cannot do things like shorting a stock. Shorting a stock is when you make money when the stock goes down. And so wishing that a business goes down in value is not something that's from our principles. And so shorting is not allowed. Also, things like contracts for differences, for those that are familiar with that, you're not actually buying stocks, you're actually sort of betting on the change in value of a stock. But the cool thing about stocks is anyone can buy them, so it's pretty easy to get into this. Small businesses would be like your friends opening an ice cream shop or a laundromat, or you're opening one. Great for business people. The opportunities come along very rarely. You basically have to know someone who's starting a small business or needs investment for a small business. Again, it's halal as long as the business itself is halal and you're not dealing with interest in some form or fashion. Private equity is very rarely done by Muslims. It's usually a highly leveraged environment where, again, you're dealing with a lot of loans from the banks and doing things like that. What is private equity? It's when you're building a portfolio of like buying businesses generally, and then you're quickly working on dramatically increasing their value. So you grow them, you make them more profitable, and then you flip them, you sell them. We're starting to see them in the Muslim space. There's a new private equity company called Nurquest, for example. Um, Private equity does have high returns, but also has pretty high risk. And then there's venture capital, which is how startups start. And so you have angel, seed, and venture capital. Uh, Oftentimes these deal with things like convertible notes, which can be impermissible, but there are halal ways to structure these. You can have halal safes. They have to go through some changes in their conditions, but you can do venture capital as well. The next category it looks like is stores of value. So I want to make clear that a store of value is actually not an investment. A store of value is how you save cash. So I can save it in US dollars, I can save it in British pounds, I can save it in euros. And in fact, when I'm saving money for the next 3 months, then I'm probably keeping it that way in some sort of cash. The reason it's not an investment is it's not providing any benefit to anyone other than you. You're not selling any product or service. You're not creating any jobs. Money's not actually circulating. You're not boosting the economy. So it's really not an investment. It's not haram or anything. It's not wrong to do. You should just do this with a smaller portion of your wealth because this is the part that's not going to circulate. It's the part that's going to sit somewhere. Collectibles are the same. So if you buy Rolexes or if you buy, I don't know, sports cars or arts or what art collectibles, whatever it might be, is just a way of storing your value. And then cryptocurrency really is just a subset of that because cryptocurrency is currency. So it's another store of value. It's not really an investment. It's just something that you're trying to protect. If you're buying this, for example, for you think that the cryptocurrency is going to hold the value better than the US dollar, that's fine, but it's really not an investment. And then on the right side, what you see are a bunch of interest-based products. They're all based on something to do with riba, and all of them involve some sort of loaning money out and then getting a return, which would be called riba or interest, and that's why they're not halal. So money market funds, target date funds that are based on interest, bonds, treasury bills, treasury notes, and a variety of other things, those would not be permissible because they're just based on riba.
All right, we covered a little bit about what are the different types of investment options. And maybe let's talk a little bit about like where should someone start investing when they're a beginner.
Yeah. So Safir, maybe you can take that question because you've been investing for a while. You advise others. If you were to start over, or if you're advising someone who's new to investing, where do you think they should start?
I think the easiest place to start is passively investing in the stock market. The stock market, which we'll talk about a little bit later in our chart, is generally very liquid. Is easy to access if you need money. Generally, great returns. 8 to 10% in a purely passive manner. You don't have to do any work. And you barely need anything to get started. Often you can start with $10, $50, even $100. Actually, yes, 2 days ago I had a event and someone asked me like, what if I only have like $100 saved up? I was like, that's perfect. That's exactly the right place to start. Um, and so, I think as we talked about I think the first slide, the consistency and doing it early and getting that compounding behavior is kind of the most important aspect of things. And I think even when you do have lots of wealth, that's really the behavior of how you invest in the stock market doesn't really change kind of beyond that. And so I really try to prioritize investing in the most passive way possible, either through ETFs or funds, and maybe like 5% or 10% of my portfolio, it might be doing some buying some particular one individual or two stocks. Maybe you can talk a little bit about of what options we should consider from like a halal perspective of what we can invest in the stock market.
Yeah, I have to agree with you in buying the funds, first of all, because I know when I started investing, exchange traded funds or ETFs didn't exist. So I had to buy individual stocks. And then like the dot-com crash hit. So that was terrible. So I absolutely love ETFs. And similar to you, you're saying maybe 5%, maybe it's like 15, maximum of 20% where you can put in individual stocks. But usually you should be buying a fund and particularly passive funds. So yeah, so I mean, yes, like I said, you can choose individual stocks by filtering them through a Zoya app or something like that. But personally, I prefer buying funds. So when I'm buying stocks, more than like I would say like 90-95% of my portfolio, I haven't checked recently, but it was close to 90-95% is going into what I call halal funds. And halal funds are option like there's one fund called HLAL, literally. It's called HLAL by Wahid Invest. And they take the S&P 500, so they take all of the 500 like largest stocks in the US stock market. They subtract from that all the haram stuff and they leave the halal, and that's what I call it HLAL. So that's a pretty good investment. I actually prefer another one, Sharia Portfolio US Stock Market, SPUS. And the reason I recommend that to people is because it's a little bit less in fees than HLAL. Also, its zakat overall is a little bit less than HLAL. And also, their returns have historically been slightly better. And so, I personally, like almost all of my stock market investment is an SPUS. And then there's other options like mutual funds. There's Amana Mutual Fund, particularly their growth fund is has a good record in history, where they select stocks to invest in. But I personally prefer like very passive, where you're buying almost the entire stock market minus just the haram stuff. So SPUS is kind of my way to go.
Can you explain a little bit of why the zakat is a little bit different in those considerations? I know
Yeah,
it's an advanced question, but
yeah, sure. So the thing is that when you're investing in the stock market, if you're day trading in and out of the stock market, then you end up paying a lot of zakat. You actually end up paying a lot of taxes too, because you have all these short-term capital gains and you keep losing money to taxes, but you also lose a lot of zakat because you, as day traders, the stocks are looked at as commodities. So you pay 2.5%, the full zakat on the full market value of the stock. But when you're buying for the long term, then you're looking at the zakat like 365 days or more. You're looking at that stock as a business. And so when you pay zakat on business, you're only paying on the cash that the business has, accounts receivable, like money they're due, and inventory, which is actual product, whether it's finished or not, that they're going to ship. And so the zakat burden gets dramatically reduced because, for example, SPUS, last I checked, if you had like $100 worth of it, you would only pay zakat on like $11 worth of it. So it's 2.5% of $11, not 2.5% of $100. And so HLAL happens to be just a little bit more heavy in maybe like the manufacturing and industrial side versus SPUS is maybe a little bit slightly more services oriented. But historically SPUS is at like a couple of percentage points less zakat. So but that's not the main reason. I mean SPUS I just prefer again lower fees as well. I think that's another big one.
yeah. I think for me, I'm generally very investing in ETFs or funds as well. I prefer to get like a little bit of an alpha boost. I prefer to have a little bit slightly like tech flavor to it, more of a tech flavor, even though that's kind of already built in with like the SP US index, right? So generally, when we're talking about indexes, these are weighted indexes. So the larger the company, the larger percentage it has in the index. And the tech companies generally are the largest companies. They call them whatever the Mag 7 now, I think, or might be
Yeah.
Mag 8 soon. I'm not sure, but like Apple and Microsoft each are 2 or 3 trillion, I think now at some point of time. But I prefer a slightly more tech weighted, even more than that. It's like super aggressive. So I usually follow QQQ, but it's not that compliant. I think it's only about like 65% compliant, and then I filter out all of the non-compliant stocks, and then publish that basket once a year um, on my personal finance guide, Muslim.finance. I haven't done it yet. I'm overdue for
Yeah.
it. Um, and then there's another one called XLK, which is about 94% compliant, just under the threshold for the 5%. But I think the strategy is like 99% the same, basically, right?
Yeah, I find like I mean I too have a thesis that tech is kind of defining the economy, leading the economy, but I'm just looking at if you just look at, for example, the S&P 500 itself, 34%, I just checked a few days ago, 34% is just Mag 7. And for
Yeah.
those that don't know Mag 7, it's Apple, Nvidia, Microsoft, Google, Amazon, Facebook, Meta, and Tesla. Those seven companies alone are 34% of the S&P 500. And they're going to be even, and by the way, that's not even all the tech companies. I had like Broadcom, which is now $1 trillion, TSMC, and all these other companies. And you're going to find like S&P 500 is so dominated by tech that I don't feel the need to go add more tech. Like if tech was to go down, I just need some of that those other sectors to help maintain the portfolio that I have. But you're right, like we're not that far apart in how we're investing, but we do have slightly different strategies.
Yeah, yeah. Let's maybe shift the conversation, talk a little bit about diversification.
Yeah. So, Safir, why don't you tell us why do we need to diversify? Why can't we just invest in the stock market? When should one diversify? Like, what's the big deal?
Yeah, I think we have a slide on this. So this shows the level of volatility that kind of exists in the stock market, right? And so um, the stock market's biggest strength in terms of liquidity, of having such easy access to buy and sell anytime, is also its biggest weakness, I think, because people get emotional, they start buying and selling, and then there's also different types of people in the market too. There's short-term traders, like we talked about. There's long-term investors, right? Um, and so that has a big impact for kind of what happened in the stock market. So you can see in this chart that in any particular year, there's 8, 9, sometimes even 30, 40% drawdowns in just one year, right? And then there's also a lot of gains, but there's a lot of volatility. So for me, I think I think you need to like start building a solid foundation for your investment portfolio, right? And so while you can have a growth component, you also need to be thinking about like, okay, can I actually withstand if it falls 30%? A lot of people theoretically say that yes, I can, but when it comes to the actual moment, they cave, you know? Um, and so building a foundation where you have maybe some income components out of your portfolio or something that's like low risk, low yield, where you're actually starting to build a strategy and not chasing returns, I think becomes like a critical element to that. And then there's also maybe you can talk a little bit about like what are some other factors that you've like why have you diversified as well?
Yeah, so I mean, I would say a couple of things. Number one, as your portfolio gets to a certain size, right, the numbers are just getting large enough that you don't want to put all of that money at risk in just one asset class. So maybe I would say, like for me personally, when I'm advising people, it's easy to get into the stock market. You can keep doing the funds. You can keep riding that curve for a long time. And I think Safir, for you and I both, like that's been our largest
Yeah,
portfolio
definitely.
component, and we can get into portfolio components later. And so I think it's a great way to go. But once you reached a certain size, maybe it's like 200,000, 250,000, something like that, then you need to start expanding. And then the other factor there is just age. And so when you get to a certain point where you're more ready to, you're closer to wanting to pull that money out, then and so I'm older than you, and so I think more about like at what point will I need to pull that money out, and so I don't want to risk it as much, and so I want to reduce the volatility, which is what diversification achieves. And then also I want to start shifting more away from what you said as growth and value, like you're growing, 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 to more like I'd like to get the cash out. And to get the cash out, you start shifting more into income type of things. So things that'll give you cash every year versus things that are just growing in value every year, right?
Yeah, let me bring up this slide, which kind of shows what like a typical portfolio looks like. Maybe if you can walk us through this one a little bit.
Yeah, yep. So this slide I grabbed from just like the Fidelity Diversification website, and it's not designed for Muslims exactly, right? It talks about bonds over here, but if you look at the first pie chart, actually let's look at the last pie chart. That's called aggressive growth. And so in this last pie chart, there's a lot of investment in stocks, right? 60% in stocks, whereas on the leftmost one called conservative, there's much less in stocks. There's only like 14% in stocks. And so you can see the difference that happens when you're younger, you want to be more on the aggressive growth side, more and more in the stock market, generally speaking. As you get older, you want to shift more to the left and more to the left and more to the left until you get to something like the conservative one. Now, obviously, as Muslims, we're not going to put it in bonds, but we're going to talk about other types of investments, inshallah, that we can put it in. Okay. So the thing that I want to point out is, for example, when you look at the row that says best 12-month return, right? Obviously, the one that's more in stocks, 136%. You can make a lot of money on stocks, right? Um, the problem is that there's also the worst 12-month return, which is minus 60%, right? And so if we need the money in the next year or 2 years or 3 years, can we really afford all of a sudden to take all of our wealth and have it go down by 60% in one year? And then we have to pull it out. Now, of course, if we had the staying power, we could keep it there for a few years, no problem. Just wait. It'll come back up, inshallah. Stock market will always come back up, right? Inshallah. If you need it sooner, you can't afford for it to go down 60%. That's why you shift more towards a more conservative portfolio. So for example, if you look at and that's what I'm saying when the stock market always goes up in the long run, right? If you look at the best 20-year return, it's 16% for the aggressive portfolio. And the worst one's only 2.6%, right? So it's not even a negative. And so the stock market works incredibly well over the long time horizon, but you need a better portfolio. Like you can see, the more stable portfolio is the conservative one, where even in the worst case scenario, you're going to be making some money. And in the best case scenario, you have decent returns, like 11%, right? So we just need some sort of balancing beyond the stock market. And the key factors to consider are when do you need the money? And that generally has to do with age and how much cash from that are you going to pull.
Yeah, I think when you touched on it briefly, but since we're talking about this, I think it's worth talking about um people looking at this are questioning like 50% in bonds at some in the conservative aspect, and that's not something that we can invest in. And I think that this is actually one of the critical things that I'm most like anxious about with our community, because we're generally mostly in the stock market and maybe some real estate or so. What would you tell people, if they're, how should we construct our portfolio with having some stable income component?
Yeah, so first of all, when we're younger, it doesn't really matter. I mean, we can pretty much put all of it in the stock market, and if that goes from a few dollars, like we said earlier, you're putting $400 a month. If that goes to 3 million, and the 3 million suddenly drops to like 2.5 million, it's not that big a deal, or it goes up to 4 million, we can handle those. So the earlier we start, the less we have to worry about this. So that's one piece of it. Secondly, like as you do get to that age where you do want to start protecting it, then there are some options like Nia is one of them. But we're looking at, fixed income opportunities, and I think we'll talk about that in the next a future slide, inshallah.
Yeah. Okay, let's talk a little bit about so we've talked broadly about, investing and mostly in the stock market. Now let's talk about like diversifying our portfolio and how we can do so. So what are kind of some of the choices out there? Are we just gonna look for like the highest returns? Like how can we actually be strategic in this aspect?
Yeah, so I think you had a slide that shows returns, right?
Yeah.
Yeah, so yeah, I mean, you want to talk about this one really quickly, Safir, before we get into that conversation?
Yeah, so I think broadly I would say the number of investment choices actually is not that much, right? You can probably literally count them on two hands for us. The
Yeah.
first is the stock market, which we pretty much discussed. Generally, it's hovering around like 8 to 10% of the S&P 500, like the US stock market at least. Retirement plan, basically pretty much the same thing. In terms of real estate, like unlevered real estate, you're typically in the range of probably like 5 to 6% on a cat on like cash flow basis, and about like another 2 to 3% on appreciation. So in total, about 6 to 8, maybe some cases 9, but especially not in this market today with such limited supply of U.S. homes. If you're doing flipping of real estate, which has become very, very saturated, but generally you're kind of in the range of about 10 to 15%. And then you also have like inventory financing, which is another company that we recently actually started together, that's doing much more shorter term, in the range of like 14, upper teens basically. And then private equity is 20 to 25%, but then your time horizon often is long and all your money is locked up, right? So you're kind of stuck in it forever.
Yeah, so I think the important thing is that we're not just looking at the percentages because if this was the only slide we considered, which I'll admit that like in my early days I would look at investments and be like, oh my God, what's the highest return? And sometimes I would even miss the concept of, well, this return is coming in 2 months and that return is coming in 3 years. And so don't just look at ROI, also look at the time horizon. So now, Sophia, I know every time you and I talk, we don't talk about ROI, we talk about IRR, right? We're always talking about the internal rate of return because it adjusts for the fact that are you getting it back in 2 months? Are you getting it back in 14 months? Are you getting pieces of it, monthly? Are you getting it all at the end? So the IRR is kind of how we think about it. And these returns are like IRR, right? What we're looking at here. They're all adjusted annually. So that's fine. But other than returns, there's a variety of other things we should consider. And I think I made a slide on that on different asset classes. And so I'm not going to go through every little detail here, but just to kind of explain some of the rows and the columns, and then people can study this on their own. But I put cash here because cash is not really an investment, but it's the baseline of what we have and what we're going to hold for, at least like we want to keep 3 months worth of emergency cash around. And then if we have more than that, we might put a few more months into commodities. I put a little star there because I'm not asking people to literally go out and buy gold and things like that. What I suggest is something my dear friend and colleague Sheikh Joe Bradford recommended, which he said buy one third GLD, which is gold, one third SLV, which is silver, and one third SPPP, which is palladium and platinum. And so you're going out to your stockbroker and you're buying some GLD, some SLV, some SPPP, and these tend to maintain their value as inflation happens. And so instead of just pure cash, which I think you should hold for 3 months, for the few months after that, at least buy some commodities. Yes, they could go up and down in value, but generally they keep up with inflation. Stock funds are what we were talking about earlier, so it might be something like SPUS, HLAL, Amana, etc. And then stock funds in a retirement plan would be assuming you've put this in for example, Roth IRA or IRA or 401k or SEP, Simple, any of those types of plans. Real estate rental would be either you've bought a house and rented it out or it's inside a fund of some sort. There's different types of funds. Flipping, we talked about earlier as well. Inventory financing, a variety of haram ways to do it. We've built a halal system, alhamdulillah, through an Islamic contract called Mudaraba, which is working really well. And then private equity, which I don't know many companies doing this. There's NuerQuest. There's another one that I know that I think is going to start soon in Seattle, inshallah. So alhamdulillah, like Safir, I think these are all things you and I have both invested in, sometimes together, sometimes separately. And then on the columns, what we have is the potential return. And so we saw the numbers in the previous slide, and some of these things tend to have a higher return than others. Private equity had a very high return, and maybe we should change that to very high. The volatility, though, does matter. And so volatility means in the returns, what might happen to that return? It could go really high up, it could go really far down. It goes up and down a lot, right? So you mentioned earlier you like seeking alpha, like you're looking for alpha. Alpha is when you're trying to find a company that's underpriced. Beta in the market is how far does your stock go up and down based on when the market's going up and down. And so we're looking for, sometimes we're seeking low beta stocks. We don't want them to flip flop a lot. In tech, a lot of the stocks can actually be high beta stocks. But anyway, the idea is how much risk are you taking on your return? And so you want to try and minimize risk to some extent. But over the long run, if you're not taking enough risk, how are you going to get growth? So you do have to take more risk and you have to take smart risk to grow your stocks over the long run. And so you can see there's different levels of risk. The stock market's obviously high risk for the short term, low risk in the long term. Real estate rental is medium level risk. Flipping, you're taking a lot of risk. Inventory financing is pretty secure, so it's low risk. Private equity is very high return, but also very high risk. Liquidity is you're looking at how quickly can I take my investment and convert it back into cash. So cash, you already have cash, you pull it out of your bank account. Commodities, if you're buying the ETFs I mentioned earlier, or you're invested in stocks. Stocks you can sell immediately, get your money in 2 days. Stock funds, when they're in your retirement plan, they kind of get stuck, right? So if you have a Roth, then you can pull the contributions out. If you don't have a Roth, if you have a traditional IRA or 401k, now you're stuck with that for a few years. Real estate rental, it depends if you've bought a house. Well, it's going to take a while to sell the house. It's not that easy, especially if you still have renters in it. If it's a fund, usually the funds are also like, hey, this fund starts here and it ends in 5 years. So you're kind of stuck in it for 5 years. Some funds are ongoing funds where you can get in and then you can get out. NIA would be an example of that. You can actually get in and you can get out. Real estate flipping, it's medium depending on how the fund is structured. Usually these are project by project. Inventory financing, we're doing it as a fund. Private equity is generally speaking, again, it's a fund where you put in your money at a specific date and you pull it out at a specific date or after usually about at least 5, 6 years to get the tax benefits. So again, these things really vary in how quickly you can convert them to cash. And then another factor to consider is, can you put $25 in? Can you put $100 in? Can you put $1,000 in? So again, stocks, very easy to get in. The problem with a lot of the real estate or even real estate funds and inventory financing and private equity, people won't usually take like $1,000, $5,000. They want minimum like $50,000, $100,000. And similarly, you want investments where you can take a portion of your paycheck and invest every month, ongoing basis, right? Keep investing. And so the things they generally you can invest in a small amount. You could do the same. You can keep investing. Sorry, that's the green over here at the top. And then the ones at the bottom, those are generally funds that open on a date and close on a date, so you can't keep investing in them. So that's the way to look at it when it comes to some of these factors.
And yeah, and as a Muslim, there's even more considerations that we need to think about too, right? Like in terms of zakat. So why don't we talk a little bit about that aspect as well.
Yeah, so as a Muslim, there are other factors, and zakat is an important one because if you look at the returns that you're getting, and if you just went by the numbers on the previous slide, you're missing part of the story, which is that you're also going to have to pay zakat. So some investments are more zakat efficient than other investments are. Obviously, if you have cash or you have commodities, you're going to pay on the full value, 2.5%. Similarly, if you're buying real estate to flip it, it's considered inventory, and inventory is also considered inventory. So you're going to pay on the full value, you're going to pay 2.5%. Real estate rental, you actually don't pay anything on the real estate itself. As the rental income comes in, it becomes part of your cash. So you're automatically paying zakat on that. And then stocks, in private equity, you're again owning a portion of a business. I mentioned earlier that on a business, you don't pay full 2.5%. You're paying on the cash they hold, the accounts receivable, and the inventory. So it actually ends up being significantly less in terms of the total amount of zakat you have to pay. It's 2.5% of something less than that.
Okay, uh, just really quickly, like, what's the principal basis of like why you're not paying the full amount on like why you're not paying zakat on like if you have a rental income property versus you're paying the full amount on cash or some of the other ones that we discussed.
Yeah, fundamentally, zakat is paid on excess wealth. It's money that you are not using. Allah is very merciful to us. And so if I am using money, if I'm using my house, I don't have to pay zakat on it. Even if I buy a Ferrari and it's $1 million, and I learned from my kids that there are Ferraris that are $1 million. And so even if you buy a Ferrari that's $1 million, you actually don't have to pay zakat on it if you're using that Ferrari. Like if you're not buying it as an investment, if you're using it. And so anything you're using, Allah is merciful, you don't have to pay zakat on that. So if you're a pizza making shop, the oven that you use to make the pizza, you don't pay zakat on. The cash register you have in there, you don't pay zakat on. The fridge that holds the Coke, you don't have to pay zakat on, right? You do have to pay on the cash that's in the cash register because that's excess wealth that you could be using to do something productive with. So it's really another way you could see that Allah wants us to put money into circulation because if you're just holding on to cash, you're paying so much zakat, but if you put it into circulation, you're paying less. So similar to how a pizza maker might use his shop and his oven to make pizzas, a real estate investor is using his or her house to make them income on the house. So the rental part is called ijara. The house that you're using to do that with becomes basically a fixed asset, and a fixed asset that's being used in a business. You don't pay zakat on that. Does that answer the question
Yeah,
or? Yeah.
I think so, yeah. So let's get to the my favorite part of the conversation, I think. And this literally came out of a result of how we were analyzing different investment scenarios. So why don't you walk us through a little bit about this slide?
Yeah, this slide was how this webinar came about, right? So
Yeah.
because I think I was like, Safir, can I talk to you about, how I'm thinking about my portfolio currently? And I showed him a spreadsheet which looked very much like this. And we're like, okay, let's talk about this. Oh, this number's right, this number's right. And so we went through and had some fun with that. I guess this is how some finance nerds have some fun. So let's just kind of go through, and these numbers are really based on real returns. Don't be fooled by the fact that it says real estate rental 5%. Based on our history, we can see sometimes it's 5.2%, sometimes it's 4.9%, sometimes it's 5.1%. It's always revolving around that. So these are real numbers from real returns, real zakah, real taxes, and so on. So we'll go row by row because this is one of the more important slides, right? We talked about how the previous slide, there's a variety of factors to consider, risk and volatility and liquidity and time horizon and those other things. But also what's important to consider is net return. So people oftentimes get fooled by gross returns. Oh, look, this thing's making, it's going to make 12%, it's going to make 15%. But what's the real return? What's the real return after you factor in taxes and you factor in zakat? So a lot of people might think about taxes. Sometimes they forget to factor in zakat. Sometimes I find people who factor in taxes and zakat, but they forget to factor in that when you pay zakah, then you actually get a deduction on your taxes. So they forget to factor that in, or they forget to factor in depreciation. There's a variety of things people forget about, but at the end of the day, if you factor them all in, that's the way to look at your returns, right? Is you gotta think about each piece. So let's go through kind of row by row, maybe, Safir,
Yeah.
and I'll explain a row, and if you have questions, go ahead and ask them, or if you have something to add, go ahead and do that. But let me explain how I built this, right? So stock funds is, for example, you're investing in the stock market and you buy something like SPUS. Uh, the income that you get on it every year is just like the dividends, and it's a very tiny percentage. By the way, something to mention about this entire table is that it's going to be specific to you as an individual because my taxes are different than your taxes, and your taxes are different than someone else's taxes. And so the way to do it is build your own kind of spreadsheet, and this is what we help people do, right, in our spare time, is like build your own spreadsheet and figure this out on your own. Take your own marginal tax rates, see if you have to pay NIIT or not, see how that works for you. And then that's how we encourage you to evaluate your portfolio, but this is how I evaluated my portfolio. So your numbers may be different, right?
And we both live in
But
California, so that bumps it up some more too.
we both live in California, and so we do pay a lot of state tax, and we wish we lived in like Vegas or Seattle or Portland or something like that where you don't have to
Yeah.
pay state tax, right? So yeah, so let's look at stock funds. Like the dividends that come in are very small. The zakat that you end up paying is actually also pretty low. Why? Because like I mentioned earlier, like SPUS, you only pay zakat on like 11.4% of that or something like that. So let's round that to 12, multiply that by 2.5%, and that's 0.3%. So your total zakat obligation on $100,000 is only going to be like $300, right? So
Yeah.
it's actually pretty low. Income tax, you are going to end up paying some tax on the dividends. We're also going to get some benefit from the zakat and so on. So it's a pretty tiny amount, doesn't really matter. The growth in the stock market average in the long term is 8 to 10%. And so we assumed 8% over here. We kind of took this. And the capital gains tax is what you end up paying when you sell it at the end. But the cool part about stocks is that, and what I like about them is you invest in them and then you just keep the money there forever. And then maybe someday you sell them and then you end up paying the tax. But if you don't sell them, you don't end up paying the tax because the best trick to not pay tax is to hold on to your capital gains and then just die. I'm not even kidding. Like when you pass away, as your inheritors, as they get the money, they don't have to pay tax on that. Your capital gains get wiped out. It's called um,
Step
uh,
up basis.
step up of the cost basis, right? So that's exactly what happens. So you may not even end up paying those capital gains tax. Also, if you're really smart about it, you're donating your capital gains away to charity, either directly to the charity as stocks, or you're putting it in a donor advised fund. And so even those might get wiped out. But pretty decent return. 4.8% is sort of the net return post taxes, post zakat. Any questions or thoughts on that, Safir, before we get
Yeah, I
into
would just say that it's obvious in the numbers, but just to reiterate, when you're investing in the stock market, you're primarily seeking the growth, not the income. And so that's why the zakat and the income are much smaller component than some of the other investment options, right?
Yeah, that's something I kind of learned the hard way. And I think maybe a few years ago, I put my money into certain income making investments a bit too early, or too much money and like too much of my money into income making investments. And so what happened was they would just keep giving me returns, and that was like, oh, cool, I'm getting cash. That's really awesome. But I didn't study the tax consequences fully. So I would get like let's say I put in $1,000 and I make $100 return on that. I get the $100 back. I pay taxes on it, right? And then I invest 1,050 because maybe $50 went in taxes. And then like it would go in again, get invested, and then I get returns again, then I pay taxes again, then I invest it again. So every year I've kept paying more and more tax on it. And I'm like, that's ridiculous. And so that's why I prefer stocks because it has less to do with stocks, but just things that have more growth return rather than income return, or capital gains, if you want to call it that. It is more tax efficient. And so you grow it, grow it, grow it, grow it, grow it, and at the very end you pay taxes. You don't keep paying taxes. So that's something that I learned.
Yeah.
So let's say you're doing, yeah, sorry, go ahead.
No, no, let's talk about the retirement one. Yeah.
Yeah. So retirement plan, this is like if you're putting it into Roth IRA or Roth 401k, again, you're going to get the same kind of dividend return. You're going to get the same zakat benefit. Both AMJA and the Assembly of Muslim Jurists of America and the Fifth Council of North America and 95% of the scholars in America say that you should pay taxes on your 401k. So you're not taxes, sorry. You should pay zakat on your 401k. So you're going to end up paying the same amount of zakat. There's going to be no income tax. The growth is going to be the same, no capital gains. So you can see it's a pretty massive benefit that the net return at the end of the day is going to be 8.2%. And so this is why I think you and I go all over the country preaching to people, please, please, please open a Roth IRA and please use that and please use a Roth 401k instead of just buying stocks in the stock market. So yeah, please open a Roth IRA if you don't have one. If you don't have access to a Roth IRA because you make too much money, then invest money in an IRA and use backdoor to convert that to a Roth IRA. There's Roth IRA backdoors. Google that or ask us about it. There's mega backdoors. There's just a variety of different ways to convert to get into a retirement plan.
Yeah, yeah. Okay, let's talk about rentals. Go ahead.
Yeah. So, real estate rental, I assumed you're putting your money into a fund, whether it's commercial or residential. I actually took like numbers from NIA for this one. So 5% return on average or something like that for the income. Because we talked about rental property earlier, you don't actually end up paying zakat. You pay because you're using it, right? It's like the pizza making machine. And so you will be paying zakat on the money that you get in your bank account. You're not paying zakat on the house itself. The income tax is interesting here. What ends up happening is you do pay taxes, but there's a depreciation allowance that you get. And so that reduces your income tax because you can actually like lower your total tax by claiming depreciation. And then what happens is that reduces the cost basis. So your capital gains actually go up, but the capital gains tax percentage is lower than income tax. And so overall, you're shifting from a higher taxed number to a lower taxed number. And so that ends up providing quite a bit of benefit as well. And so you pay some capital gains tax because of the appreciation, and then you pay some more capital gains tax due to the depreciation. But
You
overall,
add it back up. Yeah.
oh, okay. And so interestingly enough, like your total net return ends up being pretty decent, even though the gross return didn't look that awesome. The net return actually turns out to be pretty decent for real estate rentals.
Yeah. And I think flipping is higher percentage returns, like around 11%. You're paying full zakat on it, right? The income tax is very high because generally you're selling something within under 12 months, so you're paying it as income. And then that's where all of the gains are. It is growth oriented, but it's basically from a tax perspective, it's all an income perspective. So you end up getting wiped out by almost half, like 50% haircut by investing in a flipping fund, and marginal difference for a much higher, relatively higher risk than like a rental investment would, and more work basically if you were, especially if you're doing it yourself.
Yeah, if you're doing it yourself, it's a lot more work. Now, depending on the real estate flip, some of them are going to make a lot more return than this. Here, I use the example of provision capital. On average, they earn like 10 to 12%, and based out of Dallas. And they have some zakat optimization opportunities, which is cool. But you're right, a lot of the problem happens when you're flipping in the short term, and so you end up paying like sort of short-term capital gains tax, which is the same as income tax. And so even though the initial return looked very, very interesting, the actual net return does go down quite a bit. Again, another reason why don't be fooled by gross returns, always look at net returns. Should we move on to inventory financing?
Yeah, yeah.
Yep. Okay. So inventory financing, I mean, there's only a couple of companies I know of that are starting to do this right now. It's sort of a unique offering. There's CCM in the UK, Cordoba Capital Markets, started by Harith Irfan, who's an ex-banker, ex-Islamic banker. And so his company does this. Safeer, I know you've started Souk Capital. There's a few other companies that are looking to do the same model as well. And the idea here is, because maybe people don't understand this as well. The idea here is you are investing in when people are selling things on like Shopify or Amazon Marketplace, sometimes they just don't have the cash to buy the goods that they need to sell them because there's a delay between when they buy something and when they sell something. And inventory financing uses a mudaraba model to allow investors to go and help the company with this inventory financing. So the returns are actually the gross returns are extremely high, but the zakat obligation ends up being very high as well. And the income tax ends up being very high because you're constantly buying goods and selling them and getting income, paying tax, then buying goods, then selling them, and then getting income, paying tax. You may be selling four times in a year, for example. Like you buy hijabs and you sell hijabs, you buy hijabs, you sell hijabs, you buy hijabs, you sell hijabs. You might be doing that four times in a year. And so you're going through like that income cycle four times, and the tax burden ends up being very high. So even though the gross profit's very high, the net profit ends up being a bit lower. And this is the kind of thing that I would put, like personally, I would put this in a Roth IRA because the greater the difference is between the taxable return and the like untaxed return, the more it makes sense to put that kind of thing in a Roth IRA. And so I would put that in a Roth IRA. So you can actually increase that from 5.8% to, actually a very high number. You can actually get it above 10%. And then finally, private equity. This is where like you get mucho big bucks if you get this right. And so, 20% plus returns. But you end up the zakat is on a business, so it's not that bad. The income tax, there's a lot of ways to optimize this. This is actually a worst case scenario. You can use QSBS, you could do 83B. There's a lot of other things you could do. There is capital gains, but that capital gains can also get wiped out with QSBS. And so the net returns are pretty high, but like we said, the risk is also high with this one. And so if you want to just flip to the next slide, I think I want to kind of summarize here is, and again, these are not for all the audience members. I see 105 people online. This won't be the same for all of you. Everyone has to do their own math. But the point that we want to make is gross returns and net returns are not the same. Don't just fall for gross returns. Look at net returns. And then don't just look at returns, look at volatility, look at time horizon, look at liquidity, and look at how old you are and when you need to pull the money out and adjust your portfolio accordingly. So I think that's the summary of the return slide. But Safir, how's your portfolio kind of like divided between these? What percentage do you have in stocks and what do you have in these other things as we wrap up here in the next couple of
I
minutes?
think I'm probably like 60% in stocks and like 30% real estate, and then 10% some of this other stuff like private equity, inventory financing, mostly just because we have our own funds and projects and we have a commitment to our investors to have skin in the game. But for other people my age that kind of I help them with their finances, they're almost like 80-90% in stocks, and then we've started introducing some real estate as a stable income, even when they're young, but a very small percentage, like 5-10% of your portfolio. I think one of the shocking things to me out of this conversation was like the I don't know what the term to use, but like the strength of the return after taxes and zakat. And like for example, like the real estate one, it seems like the lowest yield, but it's the one that actually maintained its highest, like from a percentage perspective, it maintained its return the most. Yeah, what does your allocation look like? And then maybe we'll break for Maghrib for 8 minutes or so, and then we can answer some of the questions.
Yeah. So I think we weren't here to like prescriptively tell people like put this percent in this and this percent in this. We wanted to introduce people to the concepts and talk about our portfolios. I think we've introduced people to like the different asset classes and the pros and cons of each. We've talked about the net returns here that people need to figure out on their own as well. I mean, really all you need to do is look at the return, subtract taxes, look at depreciation, things like that, subtract zakat, and then put back in the tax benefit of the zakat as well, right? So that's kind of the idea as everyone goes through their own exercise. As for me personally, last I checked, I think it was like maybe close to 80% was in stocks as well of different types. And most of the rest of it was in real estate, and a very small amount goes into things like inventory financing and private equity. Those should always be like the kind of the smaller part of your portfolio. Venture capital is not mentioned here. I've got like a very, very tiny percentage in venture capital as well, either directly in startup or through funds. But really, the vast majority is still in stocks. And then a good chunk in real estate, a good percentage in real estate, and then a smaller percent in the last couple of rows. And I think that's typically how we see portfolios constructed and how we help others construct portfolios. You start with 100% stocks. Eventually, you add in like 10% real estate. You might get to like 20% real estate. Then, if you get really older, then it gets to like 40% real estate because we consider those to be the fixed income. We also kind of look at inventory financing the way that we're doing it as fixed income as well, and a lower risk. And so that can be another like diverse way to get into fixed income. And then over time you start adding like 5%, maybe maximum of 10% in things like in private equity. I think maybe it should be like 5% of your portfolio is kind of the way that I think about it.
Yeah, yeah. Okay, great. Let's break for Maghrib. We'll reconvene at the 10-minute mark, and then we'll answer. I don't think we'll be able to answer all the questions because I think there's like 50 of them. But
40.
we'll we'll
Yeah.
we'll we'll, we'll spend we'll spend maybe 10-15 minutes answering some of the questions.
Yeah. So how many minutes past the hour will we be
10
back?
minutes. I'm just posting in the chat too. So
Okay.
eight
How
leave.
about, yeah, how about we come back at 10 minutes past the hour, right? 10 minutes
Yeah.
past the hour? Yeah.
Yeah.
Okay. Yeah, we're gonna pray Maghrib and we'll be right back to answer questions because there's a lot of questions. Yeah. Okay, Bismillah, walhamdulillah, wassalatu wassalamu ala rasulillah wa ala alihi wa sahbihi wa man wala. Uh, Safir, I think we could just go in the questions in the order in which they were received. So I'm going to try and do it rapid fire because there's a lot of questions. So I'll take some, you can take someone maybe.
Yeah,
Um,
I think Abir posted some in our chat. So I'll start with the first one that he's kind of cultivated. The
okay.
first one was thoughts on focusing heavily on increasing your wealth versus being content with what Allah subhanahu wa ta'ala has given you. It's a tough one.
Great. Yeah,
He
start
said
with
it's a
that.
soft opener. I doubt it's a soft opener.
Yeah, okay. So, of course, one should always be content with what they have. And the way that you know you're content is that you are thankful to Allah, you have tawakkul in Him. You are not attached to the wealth that He's given you, and you're not wanting it in some worldly kind of way. So obviously we want to be content with what we have. At the same time, it's okay to be rich. In Islam, we know Abdurrahman bin Auf who was one of the 10 guaranteed Jannah, was one of the richest men on the planet. I think they've estimated that Elon Musk right now has $450 billion as the richest person on earth. They estimated that Abdurrahman bin Auf, radiallahu anhu, he had $800 billion inflation adjusted for now. So he was more, he was richer than Elon Musk, and he was guaranteed Jannah. So it's okay to desire wealth. What's important is that when we are looking for wealth, that we have a good intention behind it. And so we should always have goals that we want this wealth. Allah, if you give me the wealth, I will spend it in your way. That way, even if you don't get that wealth and you have that intention, you will get reward for it as if you have gotten that wealth. And so, so yes, it's okay to want it. You should want it for good purposes, good reasons, raise your family, donate to charity, put it to beneficial use. Nothing wrong with that.
Yeah, I think for me, one natural thing has been it's been a way to support some of my friends and endeavors that they're starting. So like the inventory financing business was a result of one of our friends that has has an e-commerce company called Fit that has Muslim, modest gymwear, and they can't grow their company without having a halal inventory financing option. So lots of these endeavors, I think, have started as a result of a need, not necessarily, oh, I need X percentage return to kind of
Yeah.
make my portfolio grand and etc.
Yeah, one of my favorite expressions comes from Dr. Sana over here locally in Orange County, who's always reminding us all do well by doing good. Put your money towards good causes, and you yourself will also get a return from that, and that way you have a double reward. You're doing it, and in fact, that should be our mindset towards halal investing in the first place. Is we should be investing in those companies that are benefiting the world, and so those that are creating good products and services that are beneficial to humans, beneficial to Muslims, that's where we want to be investing the most.
Okay, next question is what is a good investment platform for my teenage kid?
You want to take that?
Um, I think M1 is not a bad platform, but because so M1 is a platform that allows you to create a basket of stocks, and that's what I use to have my QQQ filtered basket that we talked about. It forces you to be strategic. It's not like I want to buy Amazon today, I want to sell Amazon today. It forces you to say, I want to put like 20% of my uh, whatever I've allocated in the stock market to Amazon, to etc. companies. And then you can always adjust it, and then it's very easy to add money as well, even from the smallest amount. So, you can put $100 in the basket, and it's buying like all of these, small amounts in companies. So I think it's a good way to start. Schwab might be another like great platform as well.
Yeah, so my younger teenagers, what I give them is like fantasy trading, so that they're not actually dealing with real money, and so they're going in and building like fake stock accounts, but buying real stocks inside them to see how they're performing over time. And then my older teenagers, they get a Schwab account where they open a Roth IRA effectively, and so as they're earning money, they're contributing towards that. So, Vera, I think I want to take some questions from the Q&A. I don't want to punish the people who came up with things early.
Yeah.
So let me get through a couple of those. So whenever we hear about long-term investing, we see or hear compound interest. Any comment on that from an Islamic perspective? Yeah, generally speaking, the non-Muslims will use compound interest to explain the value of compounding. We don't deal with interest, so we don't talk about compound interest, but we do appreciate the value of compounding. So we just put it in halal investments like the SPUS or HLAL. And so that's why I used like the real stocks instead of talking about bonds or something like that when I showed you the graph of investment returns over time. To what extent should we worry about the halalness of the business we're investing in? We should absolutely worry about the halalness of the business we're investing in because Allah will hold us liable for that. He will ask us about that on the Day of Judgment. And so I have an entire article on the Fiqh Council of North America website, fiqhcouncil.org, where I talk about how the criteria was created to determine what's halal to invest in. The ratios are up there, the explanation behind them's up there. But one of the fundamental ratios is that no more than 5% of the business can come from haram sources. And I explain why that 5% number is there and what it came from. But we absolutely need to worry about that. Next question says, is investing in Tesla stock halal? It sells alcohol. Uh, yeah, so I just mentioned the 5%. Tesla actually makes almost all of their money from cars and power walls and solar panels and things like that. They do sell a small portion of alcohol that's not anywhere significant revenue for them. So investing in Tesla at the moment, if you look at any of the
And
screeners,
you
they'll
can use the Zoya app to see where a company's revenue and debt levels are to determine that. And you can even look up indexes, by the way, to see from an index perspective how much it's compliant as well.
yeah. Question says Mufti Taqi Uthmani said crypto is haram, I believe. Is it permissible since it's essentially gambling? So it depends on your perspective on crypto. First of all, not all crypto is, there's a broad category called crypto assets. Of those, not all crypto assets are permissible. So a lot of crypto assets are just based on haram elements. You cannot invest in them. Then we talk about, let's just say, like, for example, cryptocurrencies. Within cryptocurrencies, there's a spectrum. There's literally thousands of currencies. Many of them are just like meme currencies. They are bogus currencies, they're fraudulent currencies, they're not based on Islamic principles. So the vast majority of them, many of them are just fraud or gambling effectively. A smaller subset of them, a very tiny subset, have been through some halal screening, and you can say they would be okay. Again, I said it earlier, I don't think you're investing in them. Even Mufti Tati made a statement that putting money into foreign exchange is not investing. It's actually it's just a store of value. How can you put money into money and say I'm investing it? You're just putting money into money. So it's not investing, but you can hold it as a part of your portfolio. Some select cryptocurrencies which have been through permissibility screens by the scholars. What is the ruling on buying real estate subject to the mortgage? Okay, so if you're buying real estate, first of all, for yourself, then it is the duty of a husband, for example, or the man or the head of the household to provide a house for the family. He should be trying to do that through as halal means as possible. I personally heavily encourage people to go to organizations like Amin Housing Cooperative in California or NIA to buy their house. But both of them tend to have waiting lists. But those are like maybe they're designed to be as close to or in fact, I think Nia and Amin are designed to be like extremely, extremely halal. And then after that, there are some small issues, but you can go to Guidance or University Islamic, and then after that, or close to that also is Divan Islamic Bank. So Divan, University Guidance, those are all available. And if you're not able to get one of those to work for some reason, then you can go to a conventional mortgage, as is the fatwa of Yusuf Qaradawi and many others if you're not able to make an Islamic option work. When it comes to investing, you really should either be going with an Islamic option or even then, like the Amja fatwa on this says that you can only do it in case of need. So guidance in Divan and university actually would not be permissible if you're doing it for investing purposes. Can you comment on put can call options? I think they mean can you comment on put and call options? I said this earlier, the vast majority, like 95% plus of scholars have deemed options to be impermissible, whether they are call options or put options. They're not deemed to be permissible. Some small group of scholars have allowed certain types of options with conditions, things like covered calls. But it's a minority. The vast majority have said it's not permissible. I believe it's not permissible because I believe that the option itself is not a valid object of sale. It's not something that you can sell. It transfers risk, and risk transfer is not allowed in Islam. Can you recommend any specific ETFs or individual stocks? I think we did that during the seminar already. Do you recommend making our own ETF through Fidelity baskets? Safir, you want to take that?
Yeah, you can, but I think the problem is that you have to keep readjusting it every year. The beauty about investing in an ETF is that it's automatically adjusted at I don't know what the frequency is. Typically, it's probably like days or weeks that it's automatically adjusting. So if there's a new company that comes about that's in the ETF and that's compliant, it's going to be listed in the ETF. So I would try to go directly to the source as much as possible. And that's one of the downsides, by the way, of my M1 basket is that I only update it once a year. So there is a risk of that, although on a yearly basis, maybe only 5 or 10 stocks are changing. So it's actually not that much. And because it's so volatile that it kind of like all evens out at the end.
How do I ensure my company-sponsored 401k investment avoids riba or other haram investments? The best thing that you can do is many of the 401k plans will support something called self-directed 401k. In Fidelity, it's called brokerage link. I forget what Schwab or I forget what the other guys call it, but call them up, ask them if they support self-directed investments, and then you can invest in whatever you like. If that's not an option, then try and find something like Amana mutual funds in there. Oftentimes it's available. If that's not an option, then Sheikh Joe and I have both given fatwa that you can invest in something like the equivalent of an S&P 500. And even though it's greater than 5% impermissible, you would just purify that percentage out of the 401k. So you would just invest in something that's equivalent to the S&P 500. There's a question that says, "Are there good ones in Canada?" I don't know good ones what good what's in Canada, so I
Maybe
don't know.
ETFs.
ETFs, yeah, I would suggest that you invest in US ETFs if that's what you're looking for. Do not invest in the Canadian stock market tends to be not as cool as the US stock market. Question for Sheikh Umar: what individual companies would you recommend alongside SPUS? I tend not to recommend individual companies to other people. I might have, actually, I know who this question is coming from, so maybe you can ask me in privately, but I personally don't invest much in individual companies. The vast majority of my portfolio is in SPUS. Is there a resource I can reference on this Zakat topic? First year earnings, so want to know more. Um, I myself am part of a sub-fatwa committee in the Fiqh Council right now. We're working on the topic of zakat on stocks that we want to publish a nice fatwa on. So that should be out, I'm hoping, in the next couple of weeks before Ramadan, inshallah. Zakat in general, I think the Islamic Finance Guru website has maybe some good information on zakat. I don't really know. I haven't checked online where the good resources are. Need to
Zoya has a calculator, like if you connect your stocks as well, right? That it'll calculate the success.
Yes, Zoya's Zakat calculator is the best to use if you want to do Zakat on stocks. If you use the app, it's a free feature. You can connect it to your stock account and it'll calculate the Zakat for you. If you don't use the app, you can go to the website, zoya.finance/Zakat or something like that, and it'll calculate your Zakat for you there as well. Very cool feature, free feature. Say someone had 50,000 or 100,000 to invest. What percentage would you recommend in these ETFs? SPUS, HLAL, AMA, NX, and AMA, NA. JazakAllah Khayr. SPUS and HLAL are both trying to do the same thing. I prefer SPUS, like I said. I've actually, like, personally, I've taken almost all of my investment, put in SPUS. I like the fact that the fees are lower. AMA NX has performed well, but the fees are a bit higher. So I would just put it all in SPUS. But Safir, did you have a different thought?
Yeah, I like even though the fees are higher, AMAGX, which is the growth one, is pretty good, and then some amount of AMA and X is fine as well. Yeah.
Yeah, so I've seen people put whatever random percentages, sometimes 50-50, sometimes 80-20. How do I find out how much cash each company owns in an ETF to calculate zakat? I'm mostly invested in SPUS, HLAL. What about other ETFs? So whether it's SPUS, HLAL, or other ETFs, you want to go to the like the one that I recommend is the Zoya Finance Zakat link. And so I'm going to put this in the chat. Safir, I don't have access to the chat, but if you can share this with the attendees, please. This is where you can go to calculate zakat on any of your stocks or any of your funds. If you can put that to all of the
Yeah.
attendees, please. Yeah, that answers the question here about how to calculate the cash, accounts receivable, and inventory. It's a pretty complicated process. I used to hate doing it in Excel. Then I switched to like Python, and then it was still really hard. And then Zoya made my life easy. So I really appreciate those guys. How do we invest in projects with both of you? So I'm not, I don't, I mean, I don't have projects you can invest in. Safir it does many investments. I'm just a shitty advisor. So I tend to be an investor just like you. I help people like with their investments, but I don't have any investments to offer you. I have nothing to sell. Safir, how do people invest with you?
Well, we only have a couple like the public funds like NIA. So go to nia.com and learn a little bit about it. I would say it's only for accredited investors, which is you need to make at least 200K as an individual or 300K as a couple, or have $1 million in assets besides your primary home. But yeah, you can go to nia.com and fill out the form to learn more about investing if that's of interest.
Yeah. I mean, SPUS, you just go to your brokerage account and buy it, right? So you don't
Yeah.
need to talk to us. That's most of what you should be buying anyway. But if you want to do inventory financing, real estate, you want to do like some of these other things, then yeah, reach out to Safir. He's your guy. Okay, this is a long question, so I'm going to skip reading it for now. Is real estate a realistic option for Muslims? Both buying in cash, pooling money together seems extremely difficult. So, buying in cash is actually very hard because you need, $1 million to kind of get started in places like California. Pooling money together is also hard because who's going to give you their money, right? Like, if you're just new to the market, yes, there are a number of real estate funds. I'm not discouraging anyone from doing it. Absolutely do it. But you're right, it is hard. And so, the options end up becoming things like what people like Safir have done, and he's not the only one. That I mentioned Provision Capital in Dallas. Nia helps people buy homes, and so that's a place. Cordoba Funds is another one, although they don't have any open investment options right now through Safir. So you kind of have to know these types of people. I know there's a person in Arizona who's doing a fund in real estate. So there's a few different people across the country who do this, but you have to be able to trust them. Provision Capital is one that I've learned to trust over time as well. Curious, how should one go about calculating zakat on vested or unvested stocks from your employment, which you're holding and haven't sold? Okay, unvested shares, there's never zakat on, so that answers that question. As far as vested shares, if it's a public company, treat it just like it's public stock and calculate it the same way. If it's a private company, it depends upon liquidity and it gets complicated. So you might have to reach out to me individually and ask me that question. It does get, it's not a simple answer if you're working for a private company. And private companies are increasing more and more, the unicorns like SpaceX and Stripe and these guys. Okay, should we keep 3 months of expenses in our checking accounts and everything else in savings? Yeah, so I mean, up to you.
You want to talk about the discussion that we just had like last week about this?
The discussion that we had last week about this one. Yeah, remind me what
Savings
discussion we had.
account.
What's that?
The savings account one.
Go ahead, share. I don't remember. Yeah.
The your emergency savings, you just had it in cash or commodities, and then
Mine? Yeah,
yeah, yeah,
personally. Yeah. So
yeah.
I had like what I did was I took 6 months of savings and I put that I kept that in my checking account originally. And then when Sheikh Joe was like, hey, why don't you put it in silver and gold and platinum and palladium? So I went out and bought a little bit of GLD, SLV, and SPPP. And then Nia came out with this feature where actually you can ask for your money within 3 months. And so I said, oh, cool. And so I was like, hey, let me take that little bit of money and move it to Nia. So I keep 3 months in the checking account now, and I'm moving the rest into Nia because at 3 months' notice, I can ask for. So I can have 3 months of savings in my checking, and then I can pull the rest from Nia. So it just earns a higher return versus gold and
Yeah.
silver, all the other
Just for
ones.
1 minute, since we didn't talk about it that much, NIA basically is a fund that allows people to buy homes. So on one side of the equation, we are helping homeowners buy homes in a debt-free manner. We none of that is sold to Freddie Mae, Fannie Mac. On the other side of the equation, we have investors, and those investors help fund the homes. And what they get in return for that is that they own part of the property. So the homeowner owns 20%, the investors, NIA, own 80%, and then the homeowners pay some amount of rent for that 80%, and that's distributed. The rent is market rent. It's not based off of interest rates or whatever. And then you get to benefit from appreciation and stuff like that as well, equally whatever portions that you own. And we ran Cordoba Funds had about 100 homes in the suburbs of Michigan, and it was a very, very difficult challenge to do. And so after we sold those, I actually didn't want to do residential real estate investing again. And then Abir approached us and we started Nia. And one of the biggest benefits that I realized and why fair halal mechanisms are often the better mechanisms is you realize with the Nia model, your renter is also a co-owner. And so his incentives for everything of how he maintains the home and how he treats the home and kind of the way he's able to rent and buy equity over time is completely different than a regular tenant would. So that's one of the major benefits and helps make management of properties a lot smoother process, right? Where if you were to individually buy a rental home, you're buying one house versus here you buy a share, like one share in like 100 houses, and have your investment split across multiple ways.
Yeah. So
And
so yeah, so Nia's pretty cool. And you're solving both problems, right? You're helping people buy houses and you're helping investors invest in real estate. Okay, cool. I'm going to try and go through some of these that are like really short answers. So, how do we purify dividends and capital gains for individual Sharia compliant stocks? If you Google Zoya space purifying stocks or something like that, you're going to find an article that teaches you all about how to purify stocks. Sheikh Joe and I both blessed that article. And my recommendation is that you purify both the dividends as well as the capital gains. Okay, the dividends and the capital gains, purify both, do it once a year. When you get your 1099 at the end of the year, 1099 div and all that, you take that, you look at it, calculate the purification of the dividends and the capital gains, take care of it. If you do it more than once in a year, you may get lazy and not do it. So that's the way to go. First time learning that zakat is only paid on a portion of index funds, e.g. SPS or halal. How do we calculate the amount portion we owe zakat on? We posted the link on Zoya. Only the zakat is only going to be paid on the portion if you're holding it for the long term, okay? So if you're holding it for the long term, go to the Zoya link that we pasted earlier, go there to calculate your zakat. If you're holding it for the short term, you're going to pay 2.5% on the market value. What's okay. How can we get involved in inventory financing? Reach out to Safeer and he can help you with that. Whether you want to actually get your inventory financed or you want to support others do it, go ahead. Is there an easy way to calculate zakat on stocks? Yes, there's an easy way. The Zoya link that we pasted earlier. Please use that. Definitely the easiest way. Is 401k considered retirement fund so no zakat? The vast majority of scholars, including the Assembly of Muslim Jurists of America and the Fiqh Council of North America, which are the two largest fiqh organizations in the country, have both said there's zakat on 401k. You don't pay zakat on pensions, but you do pay zakat on 401k. What's better, Roth 401k or standard 401k? That depends on your situation. By default, the Roth 401k is better. Okay. You will end up paying less zakat in the long term, and you're going to end up, there's just many advantages to a Roth, but there may be a case where the standard may be better. But generally speaking, the Roth is better. That depends on your individual circumstance. You're going to have to ask depending on your individual situation. Okay, please touch on this one. Adjusted step-up cost basis if we're planning on giving the account to our kids or something like that. What are the tax implications once we pass away and account goes to next generation? So we did touch on that, and we said that if you're left holding on to capital gains, whether it's in a business or a house or any other real estate or stocks, if you pass away, then whatever profit you had made that you were going to pay tax on, that profit gets ignored, and it's as if your kids are or inheritors who are whoever they are, they're buying it at this new higher price. So there's a massive savings in capital gains tax. Okay. You can use a 1031 exchange, which gives you a tax deferral and do not have to recognize capital gains on real estate flips. Yes, you can keep doing 1031 exchanges from one property to another property to another property. Eventually, if you sell, you will have to pay capital gains tax. The final thing that you have if you sell it. If you die and you do the cost basis step up, then yes, you will not have to pay capital gains tax. So yes, the 1031, absolutely. For those that are more advanced in real estate, you are going to take advantage of that. What is the Mudaraba model? So generally speaking, when you look at financing, people say there's equity where you have to buy a portion of a business as stock, for example, or there's debt where you're borrowing money, and then for the non-Muslims it would be interest based. The Mudaraba model allows you to raise money without taking debt, interest-based haram debt, and without giving equity away in your business. So you can Google Mudaraba maybe, but basically what you're doing is it's called profit sharing. It's a profit sharing model where there's an investor. The investor gives the money to an agent to do some work for them, maybe, do some business, do some trade, do whatever it is. And then they take the gross profit of that result of the whatever project it was they invested in, and they split it with the investor and themselves. That's the Mudaraba model where you have profit sharing going on. Um, any advice on Amana funds? You mentioned a couple of other funds, but not Amana, which also touts halal investments. We absolutely mentioned Amana. I don't know why you thought we didn't mention Amana. We said SPUS, we said HLAL, and we said Amana. Amana is one of the top funds in the country. The difference between SPUS and HLAL is they just buy everything in the S&P 500 minus the haram stuff. Amana does a stock selection process where they say, let me invest in the stocks that I think are going to do better than the market. That's the difference. I personally prefer passive stocks without seeking alpha so much, and so I prefer SPUS. Nothing wrong with Amana. Amana's good. Very
So
very
the
safe.
question was on Azad, not Amana.
Oh,
Azad fund.
Azad. Yes, there's also Azad funds and Iman funds and a few others. And every time, single time I've looked at their returns, just look at the returns. I've been very disappointed. And so I'd say Amana is top. Azad and Iman do not have as good a track record in terms of their returns. So I'm going purely by objective criteria, which is returns. The returns have not been
I
as
think
strong.
that generally both of them are a lot more volatile than Amana too. And Amana has strong growth, but it's less volatile. Yeah.
UIF recently launched a halal savings account. Is this the best option to park a rainy day fund? I don't know enough about the UIF account. If it gives you a guaranteed rate of return, then that would be problematic. If it gives you a variable rate of return based on profits, it would not be. When I asked them, they seem to indicate it's a guaranteed rate of return, which could be a problem. I just don't know for sure. What is a good way to determine if an ETF is halal or not?
So
Use
yeah,
the app. Yeah. Uh, how do we get a one-on-one class on halal investing? I don't think you want a one-on-one class on halal investing. That would be very expensive. Anything I do one-on-one, you'd be paying an hourly rate for. So I don't think that makes sense. But both Safir and I, we love teaching people, and so we we go out to masjids and give classes. Everywhere, really literally around the country. And so if you want to invite one of us to your masjid, we're happy to do a class, and that'll be probably the best way to do it. But if you do want one-on-one advice, that like I said, it tends to be like we're trying to benefit as many people as we can. So we're going to promote like teaching at the masjid rather than like teaching one-on-one in general. Can a link to the article be shared, please? Safir, can you find the Fifth Council article on Sharia standards for investing, please? And then just share that on the link. I joined a little late. Is there a minimum dollar to invest with you guys? I assume you're talking about Nia. Um,
just
so
email. Yeah, just email us and we can discuss it further. I'll drop the email for Nia.
okay. Yeah, I don't know if there's a minimum. Okay. Given the decentralized and authentic nature of Bitcoin, do you think that BTC is halal and more Sharia compliant than fiat currency? It's a very philosophical question. Um, people really need to understand this better. You might think it's decentralized. At the end of the day, it's like all like Coinbase and a couple of other exchanges. So it's not as decentralized as you would think. You're like, yeah, but I can take a copy and have my own keys and take it in my own, USB drive or whatever. Yeah, that's fine. How many people really do that? So yeah, that's decentralization doesn't make it any more halal or any of that stuff. The cool part about Bitcoin is it's not part of the fractional reserve system, so that's what makes it superior in ways to fiat currency, which unfortunately has a fractional reserve associated with it. If I plan on investing $10,000 more than the Roth IRA limit per year, should I get a regular brokerage account instead? So if you plan on investing $10,000, if you're married, what you could do is put, 7,000 or whatever it is, 7,500 for yourself, put the rest for your spouse. So that would be a pretty cool thing to do for your spouse. If you don't have a spouse, then you can take whatever the 7,000, 7,500, put that in the Roth IRA, put the rest of it in a regular brokerage account. So don't not use the Roth IRA. That's absolutely important. Is it safe to link Zoya to Wealthsimple? I don't want to get hacked or data stolen. Yes, alhamdulillah. The cybersecurity around Zoya is pretty good. What was the other house ownership company he mentioned in Cali? Amin Housing Cooperative is the one that I mentioned in Cali. Thoughts on asset tokenization? Is it halal? It depends. What's the best way to invest for college? Kids plan, 529. 529 has some pros and cons. And so, yes, you could use a 529. Definitely not a bad way to go, but maybe a Roth IRA could be better. So it really depends on your personal situation. If you've already maxed out your Roth IRA, then maybe the 529 could be useful. There are
Most 529s, I think, are not, they don't have good investment options as well because it's state mandated. Um, on my Muslim.finance guide, there's a section about ESAs. I'll link it in the chat. Yeah.
Okay, so that's not a question. Would it be bad to put my whole 401k into SPUS? I currently have SDBA. I don't know what's SDBA?
Self-directed brokerage account.
Oh, no, I mean you could put the whole thing in SPUS. No
Yeah, I
problem.
honestly don't think it's a bad option. Yeah.
Yeah. Should Canadians convert their income to US dollar, invest in the US? Should they use Wealthsimple or there's there better banks? Canadians, you don't have to convert it to US dollars. The brokerages that you find in Canada will allow you to invest in US stock market anyway, so you don't have to do that. You mentioned share your portfolio amount of funds, but didn't mention Azad Financial. What are your thoughts about them? Now I did mention them, and I didn't mention them originally intentionally because Azad doesn't have as good a returns. So no, nothing against them personally. Name of reference Arizona REIT, please. Arizona REIT. I don't know the name. Sorry, I don't know the name. Is it halal to invest in Google or Microsoft? As I look at Zoya and these two stocks show questionable. If they show as questionable, then they're questionable. I mean, really can't say much more beyond that. How do we reach out to Shaykh Umer privately if needed? Do you want to just drop my email address
Yeah.
over there, Safeer? Okay. If you want to reach out to me privately, email me. That's probably the best way to go. Does a short-term loan to NIA, say you ask for some or all of your investment back within 12 months, result in different tax or Zakat obligations? Well, it's not a loan to NIA. What you're doing is you're investing in a rental property, and no, it does not result in different Zakat obligations, nor does it result in different tax obligations, I believe,
Maybe the
Safir.
question is, what if you invest in it for under 12 months? Does it change?
It's not going to change your Zakat obligation. A rental property doesn't matter how long you're buying and renting it for. It's not going to change your Zakat obligation. In NIA, does rent charge change per month or per year?
Per year.
It's just like a rental contract like you would have with like a landlord. So it's once a year, generally speaking. What is the model difference between Nia and Amin? Nia and Amin are designed to be very similar in their models. They're fundamentally quite similar. Um, when I was advising Nia and Abid's interest when he founded it and Safir when they joined was to try and take it to like the highest level of halal possible so that no one could actually critique the model. So what we did was we actually bundled in that Nia will pay their portion of property tax and their portion of insurance and any other major maintenance and repairs, whereas Amin approximates some of those things. So we actually pay the exact property tax and insurance and things like that. And so Nia is like maybe just tried to Nia was inspired in many ways by Amin's model. So this is not like a dig against Amin. And then the idea was to make it commercial so that it can scale and grow. And the idea was to try and take it to the next level. That's
And we mostly operate not in California, and Amin Housing only primarily does California. Now they've expanded a little bit to Dallas, but yeah. So if you're in California, stick with Amin Housing.
Yeah. Do I have to pay zakat on Bitcoin? Yes, 2.5% of the market value. Do minors have to pay zakat on their Roth IRAs? There's a difference of opinion on if minors, basically people who have not reached the age of maturity, do they pay zakat or do they not pay zakat? The Hanafi school says that minors will not pay zakat. The Maliki, the Hanbali, and the Shafi school say that they will pay zakat. So there's a difference of opinion on zakat. Personally, I feel like it's safer to pay the zakat. So if you were asking my opinion, I would say pay the zakat. But if you're asking if you have a madhab that you prefer to follow, then the Hanafi say you don't have to pay zakat, and the others say you do have to pay zakat. What point do you recommend a financial advisor, if at all? Um, I generally don't recommend financial advisors. I generally say like learn it and do it yourself. If you do want a financial advisor, then Sheikh Joe Bradford, I know offers his services. His website, I think, is joebradford.net, I believe. So you can go to him. Um, if it's like quick questions, then Safir and I are happy to help. We're generally like that's not our profession. We're not generally like financial advisors, or we that's not our source of income. When is the next halal investing course to learn more online? I have not done one online, but I've been going around the country and there's been interest around doing it online. And so I am talking to someone about potentially creating a full seminar, like, the 10 a.m. to 6 p.m. one I talked about, a multi-hour seminar going through all of personal finance stuff, and putting that online, inshallah, like a master class. It'd be like a halal finance, personal finance master class that we would make available for a nominal price, like something that's affordable by everybody working on that. How should you start investing with student loans? Should you pay off debt and then invest? Generally speaking, you should pay off your debts first, yes. Both Islamically as well as it's just the smart money thing to do.
And I'll just add that if you still have loans right now, check out ACC, a continuous charity. Their website is acceducate.org. They provide interest-free student loans and also do refinancing, and I serve on the board of that organization.
Yeah, yeah, that's a very cool organization. How do we invite your company to a class? Reach out to Safir. He put his email address up in the chat. Okay. Um, as a follow-up, UAF says they guarantee 3.99% monthly, but they also have the option to skip certain months and pay out zero. If they're guaranteeing 3.99%, I don't know how they're doing it in a permissible fashion, honestly. So that's all I can say there. How can we reach out to Safir or other investment opportunities other than Nia? He put his email address up there, so you can email him and he will help you with that. Any halal version of SCHD, Schwab US Dividend Equity ETF. There should be a halal ETF that isn't solely growth focused, more dividend focused. So there is, I don't know of a halal ETF that's dividend focused. Although I would encourage you to maybe look at SP Funds, sp-funds.com, I think, something like that. They have a bunch of different ETFs. They now have some target date ETFs. So they might be doing some combination of dividends as well as growth. And then the other one I would suggest you look at as Amana has a couple of funds that focus on what they say, either they call them preservation,
Participation fund, yeah.
yeah, wealth preservation, or like income-based funds. And so you will find that Amana has some options, and maybe SP Funds has some options. I tried calculating zakat on Bitcoin stocks, but it's not on the Zoya website. How do I calculate Bitcoin stocks? I don't know what you mean by Bitcoin stocks. Do you mean stocks or do you mean Bitcoin? On Bitcoin, pay 2.5% of the value of the Bitcoin. Stocks, use the Zoya link that we shared. So would you recommend taking one's whole 401k, which may have 100,000 into self-directed? Yeah, sure. I currently have mine in Amana via guidance as the employer. Are there pros, cons to self-directed versus keeping it with Amana, with ADP? You can keep it with Amana, no problem there. You could take it self-directed, put it in SPUS. Either way, it's not a big deal. Either one's going to result in similar outcomes. This is the most informative about money I've received from anyone I share the same religion with. Alhamdulillah. My bank gave me interest on my cash account is the same percentage I would get from ETFs, 3.5%. What are the options for that interest? If you received it as interest, it doesn't matter whether it's the same percentage as an ETF or not. It is interest. It was earned through impermissible means. Take that interest income, give it away to charity with no expectation of reward. Fidelity puts my cash in brokerage account. Fidelity government money market deposits interest into my account. Is there a way to avoid this? Call up Fidelity and say, do not sweep my money into a money market account. Do not pay me interest on it. I called Schwab. I told them I don't give me any interest, and they put me in what's called a zero tier account where they don't pay you interest. We'll work the same thing out with Fidelity too, please. For a fee, do any of you offer professional financial guidance, planning, and investing short-term or long-term, especially in regards to buying real estate and or lucrative investments. Um, like I said, Safir and I are not financial advisors. Like that's not what we do for a profession. But every once in a while, I do have someone reach out, and yes, for a fee, I do offer advice for personal situations. Safir, I don't know if you do the same.
Just email me. We'll figure it out. Not really,
Yeah,
but yeah.
same thing. Yeah, email me and we can work through it. Are there websites which help in figuring out what percentage of zakat we should pay for individual stocks or mutual funds? Yes, the Zoya Finance Zakat website. We already gave that link earlier. What are your thoughts on investing in Bitcoin, not crypto? Beyond the usual reasons, its scarcity like gold, its ease of transfer like dollars, its historical performance, specifically given that our fiat system is corrupt, tied to riba. Like I said, you can put your money in Bitcoin as a part of your portfolio. It's not an investment. Putting money into money is not an investment. It's just a store of value. If Bitcoin, you feel that Bitcoin is going to preserve value better in the long run, that's not a problem. You can preserve your value in Bitcoin, but just don't call it an investment. What's the return on investing in NIA? How does NIA differ from Amin? We already answered how it differs from Amin. The return on investment, it's about 5% income and
Two to
two to
three
three
percent appreciation.
appreciation. Yeah, so 5 plus 2 to 3. Can the link to the article be shared? Were you able to share the link to the article from the Fit Council?
Oh, let me text you if this is the right one. Yeah.
Okay. Musafa is a website I've used that screens halal stocks as well. Yes, that's another one that you can use. Is GLD ETF really taxed at 28% being a commodity? Taxed at 28%? No, it's taxed similarly to stocks. You pay capital gains on it. So if you keep it for the short term, it would be income tax. Long term, it would be long-term capital gains tax. What was the ACC link for students? Is the recording available for this webinar? Yes, the recording will be available. You'll be sent instructions on that. Okay. How do we handle savings accounts that pay out interest every month? My gut tells me not to have any money in them since they hand out interest, but I've heard some say these payments are fine due to inflation. They're no, they're not fine due to inflation. Interest is interest. Your gut is correct. How do you reconcile the fact that so many of the top companies in the market have Zionist connections? How do we invest while also meaningfully divesting from Israeli occupation? This has become a difficult topic. So our objective obviously is not to support the Zionists, and so anything that you could do to avoid investing in those companies, that would be great. I do realize that some of these funds have investments in companies like Google and Amazon and others who have who have supported some of this. It's very difficult to deal with this situation.
Let's
Um,
go for three more minutes.
okay. Um, okay. If I understood correctly, investing exclusively in an ETF like SPUS is recommended until you reach like 200K or so. At what point would one look into other things? Yeah, that was like a high level recommendation for each person. You have to evaluate. But like, yeah, I was saying like maybe 200K or so is a good point to start looking at that. Um, as a business, how do you pay zakat on cash? Do you calculate on the amount of cash? Or is it monthly, daily? No, once a year you have your zakat due date, right? Whatever you have your nisab that you've held for haul for a year. At that point, when that point has come when your zakat is due, you're going to pay in 2.5% of the cash, the accounts receivable, and the inventory. And if you want to know more details of that, maybe attend one of my zakat seminars. I'll be doing several of them before Ramadan, inshallah. Okay. Did you already share the link to the article?
Yeah, I sent it to you. Let me know if it's the right one.
Um, yes, that's the one. Yep.
Okay.
If you can share that with everybody, please, that would be great. Was Nia first to come up with the business model? Not the exact business model, but some of the details, yes. It's the first to have done it this way, but there's many other companies that I think want to do this. So we shared the link to the article. Are there Sharia compliant options for real estate financing? Yes, there are. Would financing through those means reduce the returns? Not necessarily. I think there's a variety of real estate financing options that can exist. You could do it through mudaraba, you could do it through musharaka, you could do it through even two-party murabaha I would be fine with. But yes, there are ways to do it. It's just too much detail to get into. I think we can go all the way up to 7 o'clock, Safir. Like I'm fine with that. Do I
Okay.
have to pay zakat on my 401k, Roth 401k? Yes, you do have to pay zakat on your 401k, Roth 401k. We talked about it. How do you calculate it? Use the Zoya calculator that we pasted earlier. Okay. Um, any specific funds or investments that are not stocks or real estate that average real estate investor can get into? Public funds, you mean? So public funds, yeah, the only ones we know of, I think, are stocks or real estate or commodities like gold and silver and palladium and platinum. We don't know of other things. Bitcoin ETFs also, as long as they hold real Bitcoin. What do you think about value-based investing in stocks? I think value-based investing is absolutely awesome. So Warren Buffett's a really cool guy, and it's great. Are you aware of any REITs that are Sharia compliant? Yes, if you look through the Zoya screen, you'll find some REITs are Sharia compliant. You recommend NIA one with, I don't know what that question's asking.
Something around the minimum investment for Nia. Yeah, SPRE if you're on the regular brokerage account, and yeah, Nia's investment is about 50K. It's not 200K. Yeah.
Okay. I had to keep a conventional mortgage home loan due to it being co-owned with a family member. Can you clarify about the halalis of the conventional home mortgage? I don't know if I've heard Ghambi Sab's opinion on this being extremely halal. Um, if you ended up owning the conventional home mortgage, just try and pay it off as quickly as you can, inshallah. Does Zoya consider Zionist ties in ethical investing? Yes,
I think they added a controversies feature for this. Yeah.
there's a controversy feature in there. Yes, that's very helpful. Okay, there are very few companies with zero debt. Some of the halal funds like SPS also have doubtful stock per Zoya app. What is the ruling on staying away from riba? How do we justify investing in these stocks which have some portion of interest-based transactions? Um, we in Sharia are accountable to the extent of our ability. If I have cash, I cannot take riba on it. I cannot give riba. Okay? Absolutely 100%. I cannot give riba and I cannot take riba, except in the case of certain necessities that scholars have allowed, where you're allowed to give riba but never take riba. Okay? When it comes to investing in a company, if we said you cannot invest in a company that deals with riba at all, even if they deal with $1 of riba, then you would lose the entire stock market. You would not be able to invest in it. So, based on the principles of al-mashaqqatu tajlibu at-taysir, then when you have hardship and difficulty, the Sharia becomes easy. And ad-daruratu tubihu al-mahzurat, that when need comes, then the impermissible becomes permissible based on the need that Muslims need the ability to invest. And the stock market's an available vehicle. Otherwise, you'd end up in 40 years, you'd have the $200,000 instead of the 3 million that we talked about at the beginning. In order to enable that, scholars, and pretty much unanimously, if you go around the world, you will find this is like a pretty much consensus across different Sharia standards, different councils have allowed for there being less than 5% of interest. And that is why it would be considered permissible because you're not directly partaking in it, you're indirectly, and then you purify that away by doing purification on
Less
yourself.
than 5% of impermissible income.
Less than
Uh,
5% of impermissible income, of which it
and
could include interest income, right?
yeah, and then maybe explain the debt like component, the
Yeah,
30%
there's
debt.
extra components, but the interest income is already covered in the 5%. So
Yeah.
read the article if you wanna learn more about that. Intrinsic value in cryptocurrency like XR. Okay, we're going to skip that one. What's the usul for the 5% number? Read my article. I just said it. Read my article on the 5%. You'll find it. Uh, pe I just also in short, like people are like, oh, the 5% number is arbitrary. Like that's made up. That people make it up. Um, have a bit more faith in scholars. Do read the article, and it talks about the 5% and where that came from. Okay, any advice on credit card usage or points accumulation despite the interest-bearing contract? So if you're dealing with a credit card and you're paying the account on time every month because it deducts from your bank account or whatever, you just pay it on time, that's not a problem. You're not dealing with an interest-bearing element. You're just borrowing money and returning it, okay? Any points you make are yours to keep because those points are coming from the fees. It's not interest at all. And by the way, it doesn't even make sense. You're the one borrowing money from them. How would they be paying you interest? You would be you would be paying them interest, right? So just think about it logically. Um, okay. How can one get into real estate rentals as a solo investor? You have to make a lot of money. Um, oh, what are some groups that you can join? I don't know. Maybe you can email Safir or he can guide you a little bit. But yeah, you have to learn a lot about real estate investing to get into it. Okay. Would zakat on SPRE be 2.5% or less? I don't know. That's a complicated one. I haven't looked into it. Is cash reserve account with betterment permissible? No. If it's earning interest on it, no. You pay zakat and cash reserves for the company's bank. Okay, I don't know what that means. So I think we've answered almost all of the questions at this point, and we're at so let's just take a look at the last two questions. How do we decide how to divvy up our money we want to invest in these different investments? Is there a website reference or schedule call? Yeah, you can reach out to us. We can help you with that, but generally, I think we gave some guidelines that you want to put like, you know, a good chunk of it into the stock market and the rest into other investments. Okay, last question. How do we advise a lay person to approach investing? Okay, I think we've answered most of these questions on this one as well. Cool. Okay, good place to end here. We've been going for almost 2 hours straight with the Maghrib break. So we had an hour of like discussion and like a good 45 minutes of Q&A. I appreciate everyone's attendance and do reach out to us if you have questions. Safir, if you want to just end with like that slide which has our contact info again, I think that would be helpful.
Yeah.
Okay. JazakAllah Khayr, everybody. Well, that one's just my contact info. And that's just you thanking me, but like maybe just
This is
yes.
the first one, yeah.
Yeah, it's
Yeah,
our
thank you,
contact
Shaykh
info.
Umer, for taking the time, answering all the questions. We appreciate it. And thank you everyone for joining. Alhamdulillah. Take care. Assalamu alaikum.
Assalamu alaikum.